First question I'm going to start with for this evening is a question from Michael. So, is the buying window for Brisbane closing? If so, what other capital cities are moving into the buying window? So, just I'll probably get into this one firstly. With Brisbane, it's still really strong from the data side of things. You've got Sunshine Coast, Brisbane, and Gold Coast. There is basically more infrastructure spend happening in those LGAs than just about any other parts of the country, and really, really tight vacancy rates, lots of population growth. So all the kind of basic fundamentals you still would like to see in that kind of sunny coast to Gold Coast market is still extremely strong, and the data in those locations, in particular, we've still got a lot of approved suburbs in those locations, but things to keep in mind, I guess, from an advisory level, when we are buying properties for clients, we don't have a price range really that we're limited to. So here at an advisory level, probably I will go backwards a step there. The minimum we can buy in the current market's about 350,000 and up. There is essentially no maximum. But your average investor, when they're going to their broker or whoever they're going to talk about property investing, they're normally got a budget in mind of somewhere circa kind of $500,000 to sub $1 million, and they're looking for about a 4.5 to a 5% rental return to manage their cash flow expenses. Now, that's not always the case for everybody, but if we have a look here, and these are mainly just the Queensland LGAs, I haven't put all of them here. I probably put the ones either close to or surrounding Brisbane. Or sometimes when people reference Brisbane in the question, they're talking more about Queensland. So we can see here in Brisbane, we've got 33 LGA suburbs at the moment, and the LGA of Brisbane, there's 33 suburbs that are sitting at an 80% R score or above. However, the price range of those suburbs are between about $1 million to $1.8 million. So the affordability there for an investor is not very strong. And your rental yields in that Queensland market is actually around about that 3.5% rate now. So Brisbane keeps pushing up, however, in terms of the pricing, but the rents are not flowing as strongly in Brisbane as they have been in some other markets. We can kind of see here in SQM over the last kind of 12 months, the prices of houses in Brisbane have rose by about 19.2%, and the rents have only gone up 5.1%. So you're seeing an extreme compression on the rental side of things. And I would not really anticipate to get that to get any better in Brisbane or Gold Coast, in particular, not because that there's not demand there and there's shortage of rentals, but what you're seeing, particularly in Brisbane and Gold Coast, and you're going to continue to see for a period of time now, just like we've seen it in Melbourne, we've seen it in Sydney. There are developers just smashing out apartments after apartments in those two cities now. So we've seen it play out in other major capitals where you get these abundance of rental stock properties in those 1 or 2 bedroom apartments, townhouse complexes, whatever it might be. Not necessarily great growth assets, but those properties do provide an alternative from the rental side of things. So I'm not really anticipating Brisbane to start coming roaring back into the fours and even to have a five. The fives in Brisbane might be gone forever at this point. So that's just what we see there. We go into Ipswich. There's still 14 approved LGAs in there. I should preference, though, that of those 14, heaps of them have public housing and flood zones and high tension power lines and stuff. So there would be barely any that actually get through from an advisory level buying side. The price range of those suburbs are between that 650 to 900,000. Even in Ipswich, which is a good kind of 35 minutes, I'm sure somebody from Queensland will tell me, and it's not 35 minutes in traffic, but that's about a 4.5% yield now at a push. In Toowoomba, there's only around about 5 suburbs at the moment, and Toowoomba's gone. Obviously, we were in there quite early, but that's still sitting around that 550 to 700. Again, 4.5% yield. So even your regional towns, they're not really pushing the rental market as aggressive as we'd like. Sunny Coast has got 17 suburbs, but again, the price range there is around that $1 to $1.5 million and 4%. And Gold Coast has got 19. Price point there is just going gangbusters, 1.2 to 1.8. The yields are still okay for Gold Coast in comparison to its price. That's around about 4, and some of them were closer to 4.5%, but that's around the average. And then there's still a few suburbs in Logan floating around 750 to 900,000. The yields there are about 4.5%. So I wouldn't say that the window is closing on Brisbane. What I will say though is you're probably not going to see such a herd mentality of investors piling into there as strongly as before because affordability is potentially slipping away. So, in terms of their servicing, being able to afford the property, they may be working their way down the ladder, buying townhouses, more, apartments, units to be able to get into those markets if they're hell bent getting in. But I wouldn't say the window's closing. There's still crazy, crazy shortages. So I hope that answers your question. Okay.